The silent wealth transfer. How $84 trillion will change investing forever. In recent years, a financial phenomenon has begun to take shape that promises to reshape the investment landscape in profound ways. This silent wealth transfer, which has been quietly unfolding for decades, is poised to dramatically alter the global economy and redefine traditional investment strategies. The transfer involves the passing of wealth from one generation to the next, with an estimated $84 trillion in assets expected to shift hands over the next few decades. But the true impact of this transfer extends beyond mere inheritance. This wealth shift is set to transform how investments are made, what assets are prioritized, and how wealth is managed. Understanding the $84 trillion wealth transfer. The figure of $84 trillion is not a mere number. It represents the wealth held by the baby boomer generation, the wealthiest generation in history. As they age, baby boomers are starting to pass on their assets to the next generation, known as Generation X and Millennials. This transfer, which is expected to unfold over the next 25 years, is the largest wealth shift in history. This transfer isn't just about inheritance. It also includes the redistribution of wealth through gifts, charitable donations, and wealth management strategies. The result is a massive transfer of not only money, but also economic power and decision-making influence. The rise of a new investor class. One of the most significant changes brought about by this wealth transfer is the emergence of a new investor class. The heirs of baby boomers are far more diverse, tech-savvy, and investment-conscious than their predecessors. Millennials, in particular, are known for their strong preferences for socially responsible investing, sustainable business practices, and technology-driven investment opportunities. This new class of investors is shifting away from traditional asset classes like stocks and bonds and is embracing more innovative options such as cryptocurrency, real estate technology, and renewable energy investments. In fact, a recent study showed that 72% of millennials are willing to invest in emerging industries, such as blockchain and electric vehicles, indicating a dramatic departure from the traditional investment strategies followed by their parents. Impact on traditional investment strategies. As the new generation inherits wealth, their preferences are likely to reshape the traditional investment market. The traditional stock and bond markets, which were once the go-to choices for investors, may see a shift in demand. Younger investors are looking for more dynamic, high-growth opportunities that align with their values. As a result, we can expect to see increased interest in startups, venture capital, and alternative investments. For example, the rise of environmental, social, and governance (ESG) investing has already disrupted the market. ESG investments take into account the ethical and environmental impact of a company's operations, and the growing demand for these investments reflects the values of younger investors. According to a report by the Global Sustainable Investment Alliance, global ESG assets reached $35 trillion in 2020, and that number is expected to continue rising as wealth passes to the younger generation. Additionally, the explosion of fintech and the increasing popularity of robo-advisors is enabling younger investors to take a more hands-on approach to wealth management. Digital platforms offer personalized investment strategies with lower fees and greater accessibility, which aligns with the preferences of younger tech-driven investors. The influence of technology and digital assets. Technology is playing a crucial role in this wealth transfer, particularly in the form of digital assets. Cryptocurrency, blockchain technology, and decentralized finance, DeFi, are all areas in which younger investors are showing strong interest. These assets, which were once viewed as niche and speculative, are now seen as legitimate investment opportunities by many in the younger generation. The popularity of Bitcoin, Ethereum, and other digital currencies has skyrocketed, and they are now seen as important diversifiers in investment portfolios. The flexibility and growth potential of cryptocurrencies have made them particularly attractive to millennials and Gen Z investors who are seeking high-risk, high-reward opportunities that can outperform traditional investment classes. Moreover, NFTs, non-fungible tokens, are creating new avenues for wealth generation. These unique digital assets, which can represent anything from art to real estate, are rapidly gaining traction among younger investors. The potential for long-term value growth in these assets is enticing, and they represent the future of investing in a digital-first world. Real estate and the changing landscape. While technology-driven investments are gaining ground, real estate continues to be a cornerstone of wealth building. However, the way people invest in real estate is changing. With the rise of crowdfunding platforms, fractional ownership, and real estate investment trusts, (REIs), younger investors are finding new ways to participate in the real estate market without the barriers of traditional homeownership or large capital requirements. Additionally, the demand for sustainable and eco-friendly properties is on the rise. Younger investors are gravitating toward real estate developments that focus on sustainability, energy efficiency, and smart technologies. This shift is likely to accelerate as baby boomers pass on their wealth, creating an opportunity for sustainable real estate ventures to flourish. The charitable aspect of the wealth transfer. One of the most remarkable aspects of the $84 trillion wealth transfer is the growing focus on philanthropy. As the wealth shifts to younger generations, many of these heirs are increasingly prioritizing charitable giving and social impact. Studies show that millennials are more likely to donate to charity and support causes they believe in than previous generations. This shift in philanthropic behavior is expected to create a profound impact on charitable organizations and causes. Wealthy individuals are no longer just passing on their wealth to their heirs. They are also directing it toward causes and projects that align with their values. The rise of impact investing, where investors aim to generate both financial returns and positive social or environmental outcomes, is an example of how wealth transfer is changing the philanthropic landscape. The future of wealth management. As the $84 trillion wealth transfer continues, wealth management professionals must adapt to the changing preferences of younger investors. The traditional model of wealth management, which focused primarily on stocks, bonds, and traditional asset classes, is being replaced by a more holistic approach that considers the social, environmental, and technological factors that matter to younger generations. This shift will require financial advisors to be well-versed in alternative assets, fintech tools, and sustainable investment strategies. Moreover, advisors will need to embrace technology and digital platforms to remain relevant and attract the next generation of investors. A transformative moment in investing. The $84 trillion wealth transfer is not just a financial event, it is a cultural shift that will have lasting implications for the future of investing. As baby boomers pass on their wealth to the next generation, we are seeing a fundamental shift in investment preferences, priorities, and strategies. The rise of socially responsible investing, the embrace of digital assets, and the growing importance of sustainability are just a few of the trends that will shape the future of finance. For investors and wealth managers alike, understanding the preferences of the new generation and adapting to the changing landscape will be crucial to navigating this transformative moment in investing. The silent wealth transfer may be quiet, but its effects will resonate loudly for decades to come. Let me know in the comments section below. What do you think of our video? If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go. Thank you for watching.